Hello friends, Mercedes has big problems that started back in 24. And apparently the 25th year will be a continuation of this saga with the collapse of the positions of the once leader in the premium segment. How do I know this? It's very simple. Mercedes has already reported sales for the first quarter of the 25th year and even published financial reports. And the situation there, to put it mildly, is not very good. But let's go through everything in order. Let's start with the fact that against the backdrop of economic instability, increased competition, and changing consumer preferences, the company recorded a decline in key indicators in the first quarter of the 25th year. That is, the decline continues. The company presented a detailed analysis of sales from January to March of the 25th year, including global and regional data, segment analysis, financial results, as well as the factors that influence these indicators. In the first quarter of the 25th year, Mercedes sold 446,000 passenger cars worldwide, which is 4% less compared to the same period in the 24th year, when sales amounted to almost 465,000 units. This decline reflects the overall challenges faced by the automotive industry, including macroeconomic instability, supply chain issues, and increased competition, especially in the electric vehicle segment. Yes, the drop is minor, but the company has been gradually losing ground every quarter for a year now. And this is a warning sign. The most interesting part is that sales of flagship models, such as the S-Class and Mercedes Maybach, remained relatively stable, highlighting the steady demand for luxury cars among affluent customers. Although the regular S-Class has lost a bit of ground. However, the overall sales volume in the premium segment decreased primarily due to a decline in demand for less expensive models, such as the C and E-Class. Which is very strange, because the E-Class is a new car, but apparently inadequate pricing policy is making itself felt. Sales of fully electric vehicles, including the EQ lineup, also decreased by 14% in the first quarter of 25. This significant decline contrasts with the growth in electric vehicle sales in previous years. For example, in the third quarter of 23, electric vehicle sales increased by 66%. But the boom has passed and the market has started to move away from electric frenzy. The main reasons for this decline, according to the company, are increased competition from Tesla, BYD, and other manufacturers offering more affordable models, a reduction in government support for electric vehicles in some countries, which also affected demand, and consumer expectations for new models with improved features that, in practice, are unable to confirm what the manufacturer claims on paper. But that's not all. Sales of light-duty trucks, such as the Sprinter and Vito, also decreased by 21%. This decline is linked to reduced demand from small and medium-sized businesses, as well as logistical constraints caused by trade barriers and high tariffs. Now let's go over the key markets for the company and see how the Germans are doing there. Regional analysis shows that Europe remains a key market for Mercedes, but in the first quarter of 25, sales in the region declined. In Germany, the brand's home market, which has traditionally been strong for Mercedes, there is a decline of about 7% compared to the previous quarter of 24. This is due to economic uncertainty and a reduction in consumer spending. Nevertheless, the same Mercedes G-Class continues to enjoy a high demand. China, the world's largest car market, also showed a significant sales decline of as much as 13%. Local consumers are increasingly preferring Chinese brands such as BYD and NIO, which offer competitive electric vehicles at lower prices. The increase in competition and the decline in demand for traditional internal combustion engine vehicles also played a role in this downturn. In the USA, Mercedes sales decreased by only 1% in the first quarter of 25. So the trend towards reduction is present, albeit small, and it seems likely to continue, due to high import tariffs and uncertainty in U.S. trade policy. However, the proposed 15% reduction in tariffs on parts by the Donald Trump administration could partially ease the situation for European manufacturers, including Mercedes. The saddest part of all this is that Mercedes' financial results for the first quarter of 25 also not very good, and there is a decline there as well, indicating that the company's new policy of sell less but at a higher price is not working. Net profit decreased by 1.7 times to 1.73 billion euros. In the first quarter of 24, this figure was 3 billion euros. Revenue decreased by 7%, amounting to 33.2 billion euros compared to 35.9 billion euros a year earlier. These figures were below analysts' forecasts, who expected a net profit of 2 billion euros and revenue of about 35 billion euros. All these factors also affected the profitability of the automotive division, which is projected to be at 6.8% for the 25th year, lower than in previous years. For example, the sales profitability in the third quarter of the 23rd year was 12.4%. The company assures that these results are due to a number of factors that have affected the company. These include inflation, rising prices for raw materials and energy, as well as supply chain issues that have increased production costs. This has particularly affected electric vehicles, which require expensive components such as batteries. In addition, investment expenses have increased. Mercedes continues to actively invest in the development of electric vehicles, autonomous driving systems, and digital services. These expenses, although necessary for long-term growth, reduce current profits. How will the company get out of this situation? To address this, Mercedes has developed a new plan, which I will now tell you about. Despite the current difficulties, Mercedes is implementing a series of measures to regain its position. To improve its position in the electric vehicle segment, the company plans to introduce new models of the EQ lineup in the 25th to 26th years, including updated versions of the EQE and EQS with enhanced battery features and range. The company is also investing in software and autonomous driving systems aimed at strengthening competitive advantages. Mercedes is collaborating with technology companies such as NVIDIA to develop advanced solutions to compete with the Chinese, who offer more for less. In addition to investments, the Germans are also working on cost optimization. The company is reducing about 15% of its staff in China, mainly in sales and finance departments, to adapt to new market conditions. There are also plans to optimize production capacities. The company also maintains its focus on the premium segment and continues to bet on luxury models such as the S-Class and G-Class, which show stable demand even in times of crisis. Mercedes forecasts that car sales in the 25th year will be below the level of the 24th year, and revenue and profit before interest and taxes will be significantly lower than last year's figures. Whatever the company does, the high uncertainty associated with trade tariffs and macroeconomic factors makes precise forecasting difficult. However, the reduction of tariffs on parts in the USA and potential easing of trade policy may partially improve the situation. In conclusion, I would say that the first quarter of the 25th year has become a challenging period for Mercedes. And this is just the beginning, characterized by a 4% decline in global sales, a 14% drop in electric vehicle sales, and a significant reduction in financial performance. The main challenges include economic instability, increased competition that Mercedes cannot withstand due to high prices, trade barriers, and rising production costs. In the long term, Mercedes has the potential for recovery thanks to investments in electric vehicles, digitalization, and cost optimization. However, in the short term, the company needs to adapt to rapidly changing market conditions and overcome current challenges. Otherwise, the decline will continue. Well, friends, that's all from me for today. Thank you for watching this episode. I hope you found it interesting. And to make sure you don't miss new videos, I recommend subscribing to the channel. And don't forget about Instagram, available via the link in the description. Good luck to everyone and see you soon.